Well, hello again, Solis family. Greg Solis here with the update. First of all, on the family front, it's been a busy time. We actually took off to Cancun for Emily's graduation trip. Just had a great time. Unfortunately, Jack couldn't join us. He had some engagements and some things he had to do here. But Monica and Nicole and Emily and myself went, and we just had a blast. Really, just celebrating the graduation of Emily, and then of course it was Monica's birthday. So just had a really nice time. So we're excited for the rest of the summer. A lot going on. I hope you're having a great summer as well. Market wise, so certainly I've had a better couple few weeks here. As we last time we discussed that there were some concerns out there with inflation, the Fed raising rates, and we had the debt ceiling issues, we had the banking issues, and a lot of concerns about a recession. Those things, a lot of those have dissipated. A lot of them have gone away. The debt ceiling issue has kind of been taken care of. That turned out to be a non-event. It seems like the banking industry is certainly starting to, get under control. So things are definitely better there. The Fed is looking to, they're calling it a skipping raising rates on June 15th instead of pausing. But it's the Fed is probably going to be done raising rates, but yet the economy seems pretty solid still. So we're anticipating about a 2% increase in GDP for the second quarter, but we are still anticipating a slowdown in the third and fourth quarter. So there still might be that mild recession that I've been talking about now for several months. So that's still our base case. We think that there'll probably be a slowdown in the economy. We feel that the market has priced most of that in already and is now starting to look out perhaps into 2024, where things might look a lot better as we're coming out of a recession and the Fed is actually lowering rates. So the market has recovered quite a bit. The S&P 500 since October of 2022 is up quite a bit. We were peak to trough. The S&P 500 in 2022 was off about 30 or 25%. The Nasdaq about 35%. The S&P 500 has gotten back more than half of that. We're only down about 10% now from where we were at our all-time high on the S&P 500. And the Nasdaq has gotten back about half of what it was down about 35% peak to trough, and we're down 17, 18%. So this has been a good move. We've recovered quite a bit, and the bond market is stabilized and paying out some good yields. So from our standpoint, a lot of the concerns that we had several weeks ago look a little better. Always cautious. You hear me say a lot, we're cautiously optimistic, but things are certainly looking a little bit better. So from our end, everything's positioned nicely. Portfolios look good, and we are excited about what we might get in the second half of 2023, but we remain very, very cautious, always preparing for the next bear market. It's not a matter of if it comes, but when it comes. So always be prepared. But this is a perfect lesson to hang in there when things look really bleak and they look really bad. I always love what Warren Buffett says: be greedy when everybody's fearful, be fearful when everybody's greedy, meaning don't want to sell when the markets are down. You miss these recoveries. So we've had a pretty good recovery so far. Again, I don't think we're out of the woods just yet, but things certainly look better. So that's it for now. Again, I hope you have a great summer. If you need us, don't hesitate to call. You know we're here for you. Take care and God bless.